Hi traders, welcome once again to another session. If you're new here, my name is Farida. I'm a new Forex trader. I'm going to be sharing trades I take with you on this platform. Let's hop into the chart. So what we are currently looking at is AUD New Zealand dollar on the 4 hours time frame. From here we can see that we are on an uptrend, and it's easy to spot it because of the new highs being created. This is a recent break of structure to the upside. This is another break of structure to the upside, and this is another break of structure to the upside. I'm going to explain how we got this move here. We're going to look at this current break of structure. Okay, when you are trying to analyze the market in a particular trend direction, after drawing your break of structure, you mark up your zone. This is the zone we are currently analyzing. Okay, when you mark up your zone, our goal is the bottom of that zone should move up, create a little move into the zone, then move higher, before we now talk about retracement to our point of interest. Okay, so how do you spot your point of interest and how do you draw your demand zone? In this case, you ask yourself, what is the last bearish candle? Remember, we're on the 4 hours time frame, and if we are to say that our last bearish candle is this candle, okay, that is from here to here, you draw a box that covers that entire area. That is your demand zone. Demand zone is usually for people that want to buy. Supply zone is usually for people that want to sell. Basic definition. Of course, we can go more technical into it, but this is just a basic understanding. What are you now looking for? After you break of structure, you make sure that this first pullback does not reach your 50% fib level. Let me draw that. So now here to here, does it reach our 50% fib level? The answer is no, because here is our 50% fib level, this area here. Did this low reach our 50% fib level? The answer is no. So that means the area has not been mitigated. Going down to our lower time frame, we'll go down to our 1 hour time frame to spot better entry confirmation. This is our 1 hour time frame. This demand zone, we drew it from our 4 hours time frame to get an accurate reading. Okay, we can mark this up as our inducement. Remember, inducement takes traders into the market and liquidity takes traders out of the market. So now what are we looking for? We want price to come to our demand zone. When price reaches our demand zone, we expect confirmation before we trail it to this high. This high is our target. So now what happens? Price reaches our demand zone. This candle here is the candle that we are looking out for. Once price closes above this last bearish candle, it's one of the confirmations for you to enter. So that means someone can enter here, put your stop loss below the demand area and target this high. However, I wanted to get further confirmation before I entered, and so ideally I should have waited for price to break this high. But since I saw price cleared this low here, this minor lower time frame swing low, I decided to enter at this area and target this high. And what do we see? Price played out nicely. That's one of the advantages of entering at your demand zone when you are following the trend direction. Okay, so price played out nicely. It even went higher, but you make sure that you are taking conservative take profits. One can aim for 1 to 5, 1 to 6, 1 to 4, but if your take profit exceeds a conservative level, you have to start trailing your stop loss to make sure that you do not give back to the market more than you plan. All right, to explain the supply, we are going to be using USD CHF 4 hours time frame. From here we can see we are on a downtrend. On a downtrend, you label your break of structure. What do we do after you draw your break of structure? You make sure you identify your zone. Is this zone completely identified? Yes. What are we looking for next? The price to go slightly into our zone, which is this area here, and then form lower lows. All right, what next? After identifying your break of structure to the downside, you find your topmost green bullish candle and draw a zone from there. This technically is our topmost green bullish candle, but what can we see? We can see that price has tapped into it already, which is this drawing here. So that means that we'll look for the next topmost green bullish candle, which is this green candle here. And so I'm going to draw my zone from this candle here and extend it outwards. See, from the top to the bottom of the green candle, and extend it outwards. What we are waiting for ideally is for price to come back and retest our supply zone marks up. Let me label it supply. Okay, so when price see our confirmation after break of structure, we are looking for an inducement, which is this, and then for price to reach our supply level, show us confirmation. Of course, if someone were to take an entry from the 4 hours time frame, the person's entry will be somewhere here, because ideally is to enter at the close of candle. This time frame is mostly for swing traders, but if you're entering from the 15 minutes time frame, I'm sure your closure won't be this long. Probably 15 minutes candle could close somewhere around here. In this kind of case, there's something they call break of a candle entry confirmation. That means, let's say this is your candle, let's say this is your green candle. The next candle that closes may not have to close below it. So long as the candle closes or breaks the low of that candle, that is what people refer to as break of a candle entry. So once price starts breaking that low, it means you can enter. Like here, price started breaking this low, so someone that wants to enter based on break of a candle confirmation entry can start entering from here and target the low, the last swing low, which is here. Stop loss will be above the last protected stop loss will be above the highest supply level, and the take profit will be at the last swing low, which is here to here. So what do we see? Let's see if price will play out. Okay, so here we can see price played out nicely. Remember, this example is from the 4 hours time frame. Someone that's entering market from the 4 hours time frame would likely be holding the trade for weeks, days, on extreme cases months. Okay, but the same rule applies 4 hours time frame, 1 hour time frame, 15 minutes time frame, 5 minutes time frame. You can apply the same rule. Okay, so I hope you've learned how to spot supply levels, how to spot demand levels. Just keep practicing and make sure you back test The strategy will not work 100% of the time, but once you make sure your risk management and trade management is top notch, overall you should be on the winning side. Alright guys, I'll catch you all in the next video.